Good afternoon, everyone, and welcome to TBR's webcast, State of the Public Cloud Market, Insights from TBR's Public Cloud Vendor Benchmark, recapping performance as reported in our Public Cloud Market Landscape and Cloud Vendor Profile. My name is Allison Crawford, and I will be your host for today's webinar. In the next 45 minutes, Senior Analyst Jillian Mirandi and Principal Analyst Allan Krans will walk you through what's shaping the public cloud market and how vendors have fared over the last quarter, followed by Q&A of these trends and how they will affect you. Before I pass this over to Jill and Allan, there are a few logistics I'd like to cover. First, we're recording today's session and posting it on our YouTube site, TBRI channel. We encourage you to visit our channel to watch this presentation or any of the others that we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send any questions or comments to the Q&A or chat function. Jill and Allan will address them at the end of the presentation. Or if you'd like to set up a client inquiry for more detailed discussion, please reach out directly either to the analyst or myself at the end of the webinar to set up that conversation. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find these slides as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight, and we'll share all the social media links with you again at the end of the presentation. Now let me introduce Jillian Mirandi and Allan Krans. Jillian has been spearheading our public cloud research and is the lead author of this program. Allan has been covering and writing about the software market for over 7 years and is leading our research coverage in private hybrid cloud. Together, their strategic advice is helping several of the largest cloud vendors identify new opportunities and revenue streams. And with that, let me hand this over to Allan.
Great. Thanks, Allison, and thanks, everybody, for joining. So with today's presentation, I wanted to start with an overview of some of the trends that we're seeing in the cloud market and take another baseline for why cloud is so important for the vendors that we're covering in the space and in their businesses going forward. So within the context of the facts of the business environment, that in order to continue to grow their valuations, sustain stock prices, prove the value of their business, all companies that we cover need to show growth on an ongoing quarterly basis. And so one of the baseline measures that we're using to look at growth is overall GDP. So here we have the U.S. GDP on average about 2-point-something% a year. So that's really the baseline when we look at the expansion of IT business models and the different segments that we cover. So for TBR, and I think the industry in general, when you look at a lot of the traditional IT markets, whether it's a data center, traditional software, network infrastructure, and services, almost universally, if you're looking at growing above GDP, those are all very difficult markets in which to do that. None of them are really expanding in the high single digits at a rate that's above overall GDP in inflation. And so when you're looking at really, the only way to really grow significantly in those spaces is to target share from other vendors, to expand into new customer niches, but really it's a reshuffling of the deck chairs, if you will, in terms of simply taking share from other vendors or targeting new markets. And so to really continue to expand, the market that we'll cover today, public cloud, when we looked in aggregate at the growth rates through the end of last year, at 26%. So already head and shoulders above a lot of the traditional IT markets that the longtime vendors have played in. So right there's an opportunity to, by capitalizing on growing the shift in spending to public cloud, to really go well above and beyond kind of a single-digit growth rate, which is what all the vendors that we cover really want to be able to do. So we'll go a little bit deeper into some of the insights from the public cloud environment today. The next two markets, a little bit younger in terms of their overall offerings and the customer adoption. We cover these in a separate benchmark, but just to highlight kind of the curve for the overall cloud business growth, the managed private cloud, so those single-tenant private cloud solutions that are hosted by a number of different vendors, as well as the professional services around cloud solutions, carry even more significant revenue growth rates. So in terms of targeting that opportunity, that's an emerging space that we see even a lot of the public cloud vendors looking to really fill out a different category of cloud solutions and target an expansion and a shift in dollars towards those types of solutions over traditional environments. And then the last space with, so this really enables a lot of the cloud services that we've gone through that are growing at double-digit rates. The market in terms of selling the similar types of solutions that the traditional vendors have provided for quite some time, but selling them either to different customers in the private and the public cloud providers, or to your same customers but being used in a different way to support a cloud environment rather than a traditional data center architecture. So again, just taking a step back, looking at why is cloud important, why do we see more focus not only from the longtime vendors that within their different areas are experiencing a slowdown in overall spending growth, but also generating that interest from new upstart vendors that are coming in and capitalizing in a lighter weight way on the shift in dollars going a little bit away from traditional IT and more towards a cloud environment in those different multiple flavors. So the ways to monetize cloud, and I think this is becoming increasingly important, in the public cloud space as we see a shift from not just being a direct provider of the actual cloud services, but also enabling a partner ecosystem that takes the solutions forth and develops a true partner ecosystem for cloud. So not only being able to deliver services around the actual cloud offerings, but also enabling a partner ecosystem is really where we see the shift in the overall go-to-market trends. And so Jill will cover that a little bit more in depth in public cloud. But overall, it's a shift in terms of the value of a partner ecosystem is moving from being a reseller, a provider, a channel for those solutions, to really developing unique intellectual property around the offerings, and that's what is going to make a successful ecosystem going forward. So a lot of different ways to make money in and around cloud. So to put some of this in context, public cloud we see remaining, the oldest, still a core component of the overall cloud market, even as a lot of the growth shifts to a managed private and the component side. Those numbers will come down over time, but still those are the emergent areas where we see growing customer interest, but also more in terms of offerings and go-to-market strategies on the vendor side. So certainly we see a shift in focus taking place. But what that means for public cloud is that for a lot of those workloads that have moved there today, those are a great fit. Applications like CRM, those markets are not going to go away. What's going to drive the growth in public cloud is really a melding of these different environments going forward. So looking at public cloud, not just as a standalone solution, but as part of an integrated cloud environment that has integration on the back end, that really enables a hybrid type approach from a customer standpoint to how cloud is used and the workloads for which it's used. That becomes more of the driver of growth for the public cloud environment than standalone workloads going forward. But still, sustained growth and really an increase of opportunity across the cloud markets as integration and true choice and portability for customers moves from being something that's desired to really being a reality that's enabled in the offering space. So this really illustrates some of the trend that we see taking place, shifting from, with the early on public cloud solutions, a lot of standalone offerings, a lot of siloed use, but it also enabled a different type of purchasing that I think is going to be pervasive going forward. So looking to align truly around business outcomes and solutions is something that makes hybrid a technology and a capability that we see desired almost universally today. It's been achieved by a few early adopters from the studies that we've done. But elements of that purchasing and being able to have a common platform back end to devote different resources, matching the need is something that is not going away and that is going to really change some of the ways that public cloud is being used and deployed going forward. Because as we said, it's still critically important, but I think the way that it's pulled into different solutions is going to mature quite tremendously over the next probably 3 years, we think, as hybrid capabilities really become more universal. And we're certainly seeing a lot of investment on the vendor side that we'll cover in today's presentation to make that happen. So those are all kind of the high level. How does public cloud fit into the overall landscape, not just for cloud, but for IT solutions in general? Because I think it's important as we dive deeper just into the public cloud space to keep it all in perspective and to know that there are a lot of forces outside of just the vendors we're going to cover today that are having an impact on the space. So with that, I'll hand it over to Jill to go through some of the highlights from the most recent public cloud benchmark.
Thanks, Allan. As Allan mentioned, the cloud market is growing quickly and steadily at this point, with public cloud making up the majority of revenue. So within inside that public cloud bar that you saw before is public cloud SaaS, PaaS, and infrastructure as a service. So we break it down into these 3 categories, and we'll go a little bit deeper into revenue and growth leaders and trends in each area. SaaS will continue to lead in terms of revenue, with traditional vendors offering cloud, so vendors like IBM, Microsoft, SAP, translating their core portfolio into cloud versions, as well as we'll see an increasing number of born-on-the-cloud vendors. So this started with Salesforce, Workday, ServiceNow, and we'll continue to see vendors like this pop up and be very successful, especially once they start to customize vertically. In the PaaS space, we think that this will remain relatively small compared to SaaS and infrastructure, but it will be the fastest growing and potentially the stickiest of the layers. Lastly, infrastructure as a service will continue to grow at a steady pace as more workloads are migrated to public cloud, as customers integrate hybrid cloud across their IT environments, and as more use cases are derived from cloud, including BI and services around infrastructure as a service. So this depicts a benchmark view of the public cloud, the top vendors in this space. We cover 50 vendors, and this graph covers the vendors who have, over the trailing 12 months, $150 million or more in revenue. The x-axis represents year-to-year public cloud dollar growth. The y-axis represents year-to-year public cloud percentage growth, and the size of the bubble represents the volume of public cloud revenue. So with the maturing of the market, leaders in such as Microsoft, Salesforce, Amazon, they're beginning to be much more clear. Even Google, Workday, SAP, companies who have invested in cloud are beginning to move away from the pack and really becoming leaders in the category that will drive the next wave of growth. What's also becoming clear is that, as Allan mentioned, not everyone wants to provide public cloud services. Vendors like EMC and Dell, they want to enable public cloud as well as offer professional services around public cloud, but don't necessarily want to deliver public cloud. Even vendors like IBM and HP, public cloud is a piece of their hybrid cloud strategy, but they really want to be more in the hybrid cloud space, and public is more of an area of that. The early-to-market leaders, Amazon, Microsoft, Salesforce, they've all been improving integration of organically built and acquired services into their core offerings to increase customer value and grow share of wallet horizontally inside of their customer bases. After years of investment, IBM's acquisition of SoftLayer has finally pushed it into that leadership space, and we see it as being a very serious threat to companies like Amazon in the infrastructure as a service space. Leaders have the largest volume of public cloud revenue, while contenders are smaller but more quickly growing. And we think eventually these contenders, again, they'll become so big in volume that they'll go more into that leadership category, and the next wave of investments, or the next wave of vendors, which will likely be born on the cloud vendors, potentially companies like Oracle and Fujitsu will rise up into that contender bucket. Next, I wanted to talk about the biggest trends we're seeing in each category of cloud revenue. For the application space, or the SaaS space, the go-to-market strategies have been evolving beyond direct sales and really into an ecosystem-led approach, which is needed to serve the broadest of markets. Salesforce and Box rely on the channel to tailor solutions to verticals. Google is improving incentives to attract partners, and Microsoft is expanding SaaS sales into its established partner base. In the PaaS space, platform capabilities, openness and supporting open source communities, ease of use, opening APIs, these are all driving developer attraction and loyalty. A large and diverse ISV partner base or developer base will help tailor products vertically and horizontally, which again will increase vendor stickiness and help spread the company across the customer base. PaaS leaders like Salesforce, Microsoft, Google, and I believe IBM will get there soon, will increase focus on their platform-related ecosystems, again, to attract these developers, fill up their app stores, and really stay in the leadership spot ahead of competitors who are all doing the same thing. Lastly, in the infrastructure space, vendors are investing in new use cases and capabilities around their compute and storage, such as big data and improved consulting and systems integration to gain more revenue out of current customers, as well as to improve their overall value propositions to be able to service the enterprise. The vast majority of infrastructure vendors, including Amazon, Rackspace, GoGrid, IBM, HP, they're all investing to run analytics on their platforms. Secondly, the self-service vendors, Amazon and Google, they're building out their consulting and systems integration practices either through internal hiring or partnerships. So that's an interesting area that we'll dive into a little further. But first we'll look at SaaS. So the story here is really to expand. This is the most mature of the public cloud markets, and therefore the leaders, they're pretty far ahead at this point, but competitors are very quickly catching up. So these leaders, their story is to expand. They're expanding their portfolio, they're increasing integration across their own portfolio and acquisitions, expanding go-to-market strategies, and just they really want to get as much revenue from each customer as possible before competitors creep up. Volume leaders like Salesforce are expanding their portfolio horizontally through acquisitions like ExactTarget, as well as through integration. So they have Performance Edition, which integrates Sales Cloud, Service Cloud, a few of their other products, and it's just a different go-to-market approach for them, and it's enabling a lot of cross-selling. And SAP, similarly, they're a newer leader in our benchmark, and what they've been doing more recently is integrating JAM and collaboration functionality across their cloud and on-prem platform, again, to cross-sell and to get into those new areas. To sum it up, by expanding capabilities across horizontal areas, the vendors increase share of wallet and prevent customers from looking to other ecosystems to provide add-on applications and functionality. Now, the growth leaders, Google, Workday, Box, are quite a lot smaller than the volume leaders and therefore have different growth strategies. Google is improving its partner program to drive partner loyalty. For example, a few months ago, they introduced a monthly alternative to its annual payment plan to really improve the flexibility to apps vendors. They've also increased ease of use for the end user with add-ons for docs and sheets. Workday, similarly, they're simplifying user experience to increase usage and create cross-selling opportunities with their newer financial portfolio. And lastly, Box is customizing its go-to-market efforts with vertical targets. Box has made several C-suite hires already, and we expect more across the year. For example, they hired former Chiquita brand CIO in February to lead retail, CPG, and hospitality, and signed on former U.S. government CTO Anish Chopra and Allscripts CEO Glenn Tillman as special advisors for healthcare and life sciences. So we expect a lot more hiring to be happening. Salesforce is doing something similar. So we do think that both horizontal now and vertical, probably in the next 6 months, will be big initiatives. So this slide explains a little bit more about how the born on the cloud go-to-market strategies, how they're a little bit different than the traditional strategies, and how both are eventually coming together now that traditional vendors are selling cloud. So Salesforce is the market maker here, and they get into accounts through very heavy direct sales. Once a customer is sold, they're managed by the account manager. Most of these people are generalists, but the company is starting to train people on different industries. They recently announced 6 business units that people will start to get trained up in, as well as people are starting to be trained more in specialty areas such as Marketing Cloud. They have a customer success team which is there to check in periodically onto accounts, but the account rep really holds the relationship here. And we think companies like ServiceNow and Box are a little further along in this strategy, but we'll get into that in just a minute. For Salesforce, cross-selling and upselling are very important, and reps are constantly trying to expand their accounts on all sides. The tactic has been very successful for Salesforce to date, but we do see them evolving by adding channel partners and to lessen the reliance on direct sales and marketing, and eventually to decrease costs. In 4Q13, S&M costs were 56% of revenue, which is just not sustainable in the long run. Now, ServiceNow and Box are 2 newer born-on-the-cloud vendors that have learned from Salesforce's model and tweaked it to focus more on the customer experience in terms of usage than in terms of sales. So once the account rep sells into a customer here, if the customer is large enough, a success manager will be assigned to the account. So the dual management of these accounts helps to ensure customers are using the tools and improves upselling and cross-selling across the board. Since these born-on-the-cloud vendors are able to leverage usage data, so things like seats deployed, how customers access data through a desktop or mobile, storage and compute, as well as popular modules, the companies are able to more easily be alerted to any red flags and take care of any issues well ahead of renewal time. So cloud vendors view account penetration, upselling, cross-selling, and renewals as equally important across their customer engagement life cycles. So by spending a lot up front in selling and onboarding these customers, cloud vendors are hoping or are really banking on that account expansion and renewal come at a much lower cost and will eventually drive profitability.
And so this is one of those areas when we look at the traditional sales and marketing model and the cloud sales and marketing model where we see a gap, because a lot of times you have, there's a bigger upfront investment, there's more leniency, if you will, in terms of the time to roll out a traditional solution, the road ahead in terms of the time to actually renewing that. A lot more barriers to both entry and exit on the traditional side that provide the buffer in terms of the sales and marketing investments and the touch points that are required for that type of model. And so one of the difference with cloud, lower barriers to entry, they need to spend a lot of money up front to get the attention, to win these accounts. And then the roadmap to winning that renewal really starts on day 2. They need to continually touch the customer, make sure that they're not only quote-unquote satisfied, but that they're using it, they're getting the best benefit from it, And to do that, one of the assets that these companies have come to understand that they have is all of the usage data. Since they're hosting and providing it, they have more visibility than than they would have with a traditional solution to really to identify the characteristics for what's a high-risk customer and to deploy the resources that are appropriate given the patterns and what they know about the renewal behavior. So, different challenges, but also different assets in terms of ensuring that the customer is fully using the offerings and is on track for that renewal, which becomes even more critical when your sales force spending more than half your revenue to win customers and win accounts. It's really incumbent upon them to keep a high renewal rate to help to offset some of that large cost in terms of sales and marketing expense.
The next cloud segment we wanted to talk about was platform as a service. This is really, it's a good depictor of what's going on in the market. There's the original leaders, so Salesforce, Microsoft, Google, IBM, again, has jumped into that space. And then there's a pretty wide gap between the leaders and the rest of the market. So what the leaders are doing are they're improving ease of use and functionality as well as their global footprint to drive adoption ahead of all these competitors to maintain developer loyalty and really attract an increasing number of developers, as that ecosystem is just going to be the foundation of who is successful and who isn't. So Google is tightening the App Engine integration with Compute Engine and other popular Google services to integrate across its portfolio and really become that one cohesive business unit that before now it really has been lacking. The revamped Cloud Console and user interface, they were introduced in October and really simplified Google Platform's developers' ability to integrate consumer-facing services like Analytics, Google+, and Maps within Google's PaaS and infrastructure services through APIs. This will be a continued focus of Google for the next year or so, and it's their differentiator here that they can add in those social and collaborative features. Salesforce is increasing focus on its ISV partners to drive both horizontal and vertical growth. So if developers can develop apps and sell apps, and Salesforce will get the 20–25% of the revenue, it really is a good revenue stream for them and will again increase their profitability. Salesforce One platform will also improve integration with mobile development and mobile deployment, which is their differentiator at this point. Microsoft is a little bit different. They're expanding their global footprint for Azure through physical infrastructure and partnerships in new regions such as China. They're expanding data center presence in Europe and plan to expand into Brazil over the next few months. So that will be interesting to see who will win in the Latin American market, in the Chinese market. Right now, the vast majority of revenue is derived from the United States and Western Europe. Lastly, IBM is heavily investing in platform, including the launch of BlueMix, an open source platform running on software. BlueMix positions IBM closer to the cloud-born competitors like Google and Salesforce in this space. We'll dig a bit deeper into what BlueMix means to IBM in the cloud market on the following slide. Laggards, so that the group to the left, they're pretty far behind, but we do think vendors like Pivotal and SAP, along with some of the SIs such as Deloitte and Accenture, do have the ability to move into a leadership position as investment in their platform is increasing. Now, niche vendors such as EngineYard and Cognizant are good acquisition targets. EngineYard, Oracle, and Amazon has invested in them, so they might be looking to add that capability to their own platform. And Cognizant is a healthcare-related platform, so they might be a good investment for companies like Verizon.
So with BlueMix, I think one of the things that we're tracking both within IBM and outside IBM is how to take the traditional base of solutions and modernize them for cloud. And there's a lot of different elements at play there. There's a pricing aspect, a business model aspect, there's the technology aspect, the delivery. So what this does is provide a platform for bringing IBM's huge base of middleware solutions and offerings into the cloud, making them available through that consumption model, through that delivery model. So it's really, yes, it's a current announcement, but it's something that's going to evolve over time. And I think that matches a lot of the ways that their customers are looking at this transition as well. So it's not going to be an immediate change over to an all-cloud environment. But for a lot of the tools, it starts with usage and access, and then the business model will follow. So I think what you see is providing that platform, providing the roadmap for taking a lot of those core Tivoli WebSphere assets and transitioning them over to a choice model where cloud is one option, the traditional option is not going away. It's almost in a lot of ways similar to SAP's announcement that from their perspective, they're starting with the pricing. So taking traditional software and applications, making the same type of subscription pricing that has defined cloud available, and that over time the technology part of that shift will occur, but it still provides at least some of the benefits of cloud to customers in the short term. And so IBM, this is their platform that will support the movement of that huge base of both from a financial and a technology perspective, software assets eventually over to a cloud model. So we think it's very important, but something that will play out over the course of the next couple of years.
The last space we'll take a look at is infrastructure as a service. As you can see from this graph, Amazon continues to dominate the market and will continue to over the next few years. They have a maturing portfolio of robust ISV and CNSI partner ecosystems. They've been investing in sales and professional services and use economies of scale to continually lower prices for basic infrastructure as a service. Amazon will prioritize hybrid capabilities that bridge its public infrastructure with on-prem environments and reduce indirect costs for enterprises migrating to cloud-based infrastructures to capture even more opportunity in the coming year. What is interesting, however, is the hybrid cloud space and how vendors are using public to get into hybrid. So Amazon it's 18 months ahead of Google, but it's behind Google in terms of hybrid cloud adoption and top of mind for future hybrid clouds. In ongoing hybrid cloud customer research that we do, with the Google infrastructure as a service rate of adoption to create hybrid clouds, as well as top of mind awareness and to build future hybrid clouds purchases, is about 4 times that of Amazon. And prior to this research, it was hard to believe that anyone could really catch up to Amazon, but I do think Google and IBM and Microsoft are getting there. Amazon, is growing even faster than it has in previous years, but there is more of a competitive market out there now. So Amazon is beginning to more publicly drive a hybrid cloud message, but again, Google is ahead of them in this as well because they have a more overall hybrid story. So not necessarily just cloud, but they have a hybrid story with mobile, with apps, platform, maps, Google+. So they do have, it is an interesting thing to look at. For vendors like IBM, they do very, very well in the hybrid cloud space and are one of the highest adoption rates. But again, public cloud is a way for them to really insulate their customer base and add options so customers don't use IBM for managed private cloud and professional services and then maybe move some workloads to Amazon's public cloud. IBM really wants to give them all of those choices. Among Amazon's challenges, we think that the hybrid space They're in it just like everyone else, so it's not necessarily something holding them back, but it will be something that they'll have to evolve their messaging to more further address. A global cloud enabling data centers and data center presence is also something that's working for Google, IBM, Amazon, Microsoft. So we think these are the top 4 vendors. Microsoft at this point, we think more of their public cloud infrastructure is on the private side, but we definitely do think Amazon and Microsoft are in most of the cloud infrastructure deals, and that IBM and Google are beginning to nip at their heels. So here is another slide that further depicts the price war, the CNSI war between Google and Amazon. So both of these companies are similar in that they can compete on pricing, scale, speed, global presence, and ability to very quickly roll out web services. Again, Google is a little bit behind, so Amazon is winning here, but I just wanted to look at this space and highlight the importance of the consulting and systems integration ecosystem around these 2 vendors. So Amazon, they have a partner ecosystem in place. They have for years. The SIs have built practices around Amazon, but most recently they've been hiring a professional services team on their own. And this team is more of a white glove service to help their top accounts. We believe it's a very expensive service, and it's not available to the vast majority of Amazon customers, but overall Amazon customers do have access to consulting and systems integration. On the other hand, Google is really new to this space. So Google Cloud Platform was launched a year and a half ago, and since then their biggest consulting and integration partner has been Dell. Now time will tell if Google really wants to get into this space. To date, they are a technology company and they haven't really had an enterprise team. So to support Dell, they'll need to invest a lot in this relationship. They'll have to help solve customer needs. They'll have to work with Dell more closely. They'll have special people on call for Dell. And this is all something that's very new to Google. So if they want to do it, they'll be able to do it, and they'll do a good job, but it will be an investment and it will be a challenge for them since it's such a new model. And with that, that wraps up our presentation.
Great. Thanks to those of you who have sent through questions. I do encourage anyone who has any questions to send them through now. So the first question we have, everyone, is IBM's position primarily made up of their cloud service acquisition?
Yeah. So on the public cloud side, IBM did have some assets and revenue stream before the acquisition of software, but that is really the biggest impact on their public cloud business was the purchase of software.
Yeah, so they have been in public cloud for quite a while, but I don't think that their homegrown offerings were as successful as they would have liked, so they have been making quite a lot of acquisitions to propel themselves further into the space.
And so I think, one of the dynamics that we see at play with public cloud overall is that for a lot of these providers that have private cloud services, that have systems integration services, public cloud is not going to be always operated and seen as a standalone business. It may be the offering that gets customers in, it's easy to get started, it's low risk type of commitment on the customer side. And from that point, again, one of the core attributes of cloud is once those relationships come in, they can learn from them. They can build a relationship that can lead to cross-selling and upselling other cloud and service offerings. And so, I think that was one of the biggest things that drove IBM's behavior in this space is, the need to have that lower tier public cloud entry offering because it's important for the higher end services.
Okay. We actually had a couple questions come through from one person out of order, so I'm going to just kind of do this all at the same time. The first question was, why is leadership only defined in terms of revenue?
So for this benchmark, it's a revenue-driven benchmark. So we look at the revenue leaders, so in terms of volume of revenue, as well as the growth leaders, so percentage growth.
Okay, and the second part of the conversation, there are multiple segments within cloud. Is it possible to be a leader within an individual segment? And the clarification was, by segments, I am not referring to SaaS, PaaS, etc. In other words, cloud delivery is not the only dimension by which leadership can be defined.
Yeah, and you're absolutely right. There's a ton of different leadership attributes. We could look at portfolio, breadth of services, a number of things. This is how we look at it for this report. It's benchmarking the revenue in these different segments. But yeah, you're right. We could split it up a number of different ways. And adoption too is a big one. We do a lot of adoption work where the adoption leaders that's how we measure them.
Yeah, and so I think part of it was covered in the beginning of the presentation as well, that directly providing cloud services is one way to monetize the cloud. It's not the only way. There are professional services that get wrapped around them. There are, the market in terms of being an enabler of cloud. And so we do cover those market segments separately. And so you're absolutely right. The market opportunity in some of those spaces around directly providing the cloud is sometimes as big or bigger than in providing the actual services themselves.
Okay. The next question we have, what would you say are the top 3 to 5 professional services are growing in demand, and what makes them different from the current offerings?
So from the professional services side, one of the so we've seen an evolution in the cloud professional services space. So we've covered the market for more than 5 years, and it really started with a lot of consulting advisory work as customers got familiar with the cloud offerings themselves. It's transitioned to, a lot of the services we see currently growing, cloud orchestration, integration, really kind of tying not just within a single cloud, but across multiple clouds is the growing, or the shift in demand that we see from the customer side as they look to deal with some of this complexity and the multi-cloud environments that are becoming, the norm for a lot of the customers that we're engaged with.
Yeah, and another interesting thing to point out is it's very different regionally. So between the U.S. and China is a few years behind us. So they're looking at more consulting revenue right now to figure out how they should, what workloads they should move, how they should do it, what the overall strategy is. And in the U.S., I would say it's more around the terms of what Allan was talking about, so the orchestration, the integration, and the consulting is actually a little bit lower.
Okay. We've got several questions in queue, you guys, and I know that we're up against our time, so we'll take a couple more, and then we'll probably follow up with the folks that have asked questions that we're not going to get to live today. So the next question that we have is, I'd love to hear a little more about Fujitsu. They seem to be drifting into the second tier. Will they rise into the first tier or disappear?
So I think Fujitsu has a lot of opportunity, and I think they could be a global player in infrastructure as a service. We had them in the leader category for a while, but now that the Amazons and IBMs are expanding globally so quickly, I think Fujitsu is more challenged. But I don't think they're going to disappear by any means. I think that they've put a lot of investment in cloud and that their infrastructure as a service platform will continue to grow, especially globally.
Okay.
So the next question was around the role of the reseller and the value that they're providing, shifting from a model where they're reselling offerings to one in which they're providing value around offerings. And so I think in the cloud model, why this is so important is that you know, a lot of the market today has been a largely direct sale type environment. If you look at Amazon, Salesforce on the public cloud side, not a huge play for partners in that model. And I think that the part of the solution that's emerging is that for the next kind of wave of cloud adoption, it's not going to be about the standalone service. It's going to be about much more outcomes-based, solution-based type usage of cloud, and the providers themselves are not going to take that into the mass market, make it applicable for the you know, each individual unique customer scenario. So partners have to be engaged in order to do that. You know, so we've done a fair amount of work looking at different emerging ecosystems. One of the kind of unique ones, it's a small one, but if you look at on the integration side with the integration platforms for cloud, MuleSoft has a model where they're actively engaging with the developers that are looking at the APIs needed to connect different solutions and make a hybrid environment. And they know that they're not going to be the one to develop all the APIs or even provide the services, which don't go away with cloud in terms of making the integration work. It's not as simple as a plug-and-play type solution to integrating cloud to on-premise. The ecosystem is the only way to make those solutions really relevant for the different customers, not just in SMB, but enterprise as well, because they're all different. Every environment is different. The cloud solutions may be the same, but the complexity of the businesses that are using them is going to be something that sustains and creates value for a true ecosystem where we just really haven't seen that as much to date in the early days of public cloud adoption.
Okay, I'm going to take one last very straightforward question, and then for those of you who have asked questions that we didn't get to today, I'm going to have the analysts follow up with you with some information by the end of today. End of today, okay, you guys? Okay, and then you can engage with those conversations. The last question we have, guys, is on chart 11 and 12, the Google 120,000, is that their year-to-year public SaaS revenue access position or the size of their bubble?
It is the year-to-year public SaaS revenue growth, so the absolute dollar growth.
Okay. So with that, I want to thank the analysts for their presentation today, and thanks to all of you for joining us. As I mentioned, I'm going to share all the social media links with you, so I encourage you to follow both Allan and Jill, as well as TBR at the Twitter handles listed here, as well as join the conversation on SlideShare and YouTube. And there's also some LinkedIn groups if you'd like to join those. We'll be able to share that information with you in terms of other presentations or special commentaries that we're sending out. On your way out of the webinar, there's a quick 3-question survey. How good were the presenters? How valuable was the presentation? And if there's any other feedback or comments you'd like to share with us in terms of the information we're supplying you, if there's topics that you'd like us to be covering in more detail, if there's rebuttals in terms of what the analysts are saying, we always like to get those for the conversation. So please do take the time to fill that survey out. We are using that information to change and modify our presentations quarter to quarter. So with that, I am going to shut down the webinar. There's a couple other webinars this quarter that you might want to attend. Tomorrow we have one around the data center. It's a brand new format. We're going to have 4 senior analysts debating 5 current topics, hot IT topics. So if you haven't registered for that already, please do register for that at the TBR WebEx page as you're leaving the WebEx. And then we'll be doing this presentation again next quarter. So if we can help you with anything in terms of answering questions about Living Cloud, please do reach out to us, and we look forward to speaking with you all again next quarter. Thanks, everyone. Have a great afternoon.